How to use state disability insurance and properly. Beginner mistakes that cost you. State disability insurance in New Zealand is designed to protect your income if illness or injury prevents you from working. Despite its importance, many policyholders make mistakes that limit coverage or even risk claim denial. Most people get this wrong because they assume all disabilities are automatically covered, and the surprising truth is, they are not. A common mistake is misunderstanding the definition of disability. Some state policies cover only your own occupation, while others require you to be unable to work in any occupation. Choosing the wrong definition can leave you with partial or no benefits. Neglecting the waiting period is another frequent error. This is the time before benefits begin. Longer periods lower premiums but leave you financially exposed. Shorter periods increase premiums but provide faster protection. Aligning it with your savings and monthly expenses is crucial. Underestimating benefit amounts is another trap. Coverage should reflect your income, living costs, and financial obligations. Choosing too low a benefit may save money in premiums, but could leave you underprotected if a serious illness or injury occurs. Ignoring optional riders is another mistake. State offers riders like residual disability coverage, cost of living adjustments, and future increase options. Skipping these can limit flexibility and long-term protection. Finally, providing incomplete or inaccurate medical or occupational information can jeopardize your claim. State requires full transparency during both application and claims. Misreporting or omitting details can delay or deny benefits. By avoiding these mistakes, state disability insurance can provide reliable income protection. Understand your policy's definition of disability. Select the right waiting period, set sufficient benefits, consider optional riders, and always provide accurate information to safeguard your financial future.